Morning, folks. Happy FOMC Day. The day we may finally hear from the Fed about talking about something that we may talk about. That is the story. The old, I don't even know what that is. I'm sure there's some vocab word out there that explains when you're going to talk about something that you may talk about that we'll have to talk about, but those are a little bit too many derivatives of we may talk about something. That we don't really want to go that deep. Today, we're probably going to get what we expect. And this is an important FOMC day, but I've sort of made the tone sort of bland coming into it and having us just continue on the trend because it would be very easy to take where the market is right now, going through all-time highs, and then have some anxiousness going into FOMC, which would lead to you taking profit before FOMC and reacting negatively based on your own opinion. And I would certainly do that because I'm very opinionated and I'm very biased oriented, and I think everyone is. And especially when the market is doing something that we've sort of expected, right? With this now boom with growth, and we've done very well with mega caps, right? When we now look at, so here's the S&P trading through records, the NASDAQ doing the same, right? We've been trading through records. And if all of a sudden we had this very hawkish tone and we're going to now switch up the asset buying quicker than expected, all these things, that would line up with everything that we sort of expect, which is, again, inflation's increasing faster. The economy's getting hotter than we sort of expected, maybe, 6 months, a year ago. That has led to the equity boom. We've seen that we're more tied to the economy now. We had the value trade really set up, and there's a lot of money there still, right? Some of it has been moving to the growth side, betting on risky sort of assets right now, which we've also been a part of. And a lot of it is based on we're all sort of in alignment of an understanding. And we're just going based off what the Fed gives us. They've told us that inflation that we see right now of 5%, which is well over the 2% mandate by the Fed, is transitory. It's only for right now. What we've seen, job numbers continue to go up. We're seeing wages go up. We are seeing in the CPIs, they continue to go up in multiple categories. Every single time the numbers come out, every time we see new sales data that is rising, everything is on the way for a real boom in the economy, right? When that happens, central banks look to increase interest rates. Again, to stop a situation in which things get out of control, you have to start to prepare. And so that's really what the idea of discussion is for today, is to see if the Fed is going to acknowledge this or if we're going to get the transitory word hit back at us. I do think everyone expects that there will be some sort of hint toward talking about this in the next month or so, at maybe at the next meeting. We'll finally get it. We actually might get it through the minutes. The next time we get the minutes, that's probably what's going to happen. The idea that we could just continue buying is not the problem, right? The asset buying of 120 billion a month, I think we are there. I do think we're there in terms of economic theory to just do QE, like, again, the meme of infinite QE. I don't think that's really out of the question. I don't know if we'll get a question to that. I think we're really all just around the dot plot and the interest rate. And so really what we're looking for is how many people jump to 2023. And I think I talked about this yesterday. When I was looking at it, that's sort of the average right now. Consensus is that 2023 is going to be where we see some new sort of pop-ups of members saying, okay, 2023, we're going to raise the interest rates. That's what we have priced in the market. And so here's the important thing to remember is that the market has priced that we are going to change what we're doing right now faster than what the Fed is telling us. That's because we are speculators and we're trying to take advantage of two things. One, we're trying to make money right now. We want to make money right now. And so if there's something right now we can make money on, we'll do it. This is how we get momentum. The second part of it is that we're trying to figure out how to set up a portfolio that's going to do well if certain circumstances actually come true. And so what we're betting on is that the Fed is going to actually change interest rates faster, which means we want to be positioned in the value side of things, specifically like banks, because banks do well with higher interest rates. And so that's why we're all positioned in banks. It's no secret that we're all over here sitting in a position. We've had some take profit to go into growth because, again, we want to make money now. We're all sitting in this sector because we believe as a market that the interest rates will go over zero, right? We've been living in a 0% environment for forever, right? We since 2008 when we put to zero, it's increased a tiny bit, right? That happened, and then we had to pull it back. We're gonna increase it a tiny bit. It's not gonna go. We're talking about a very small percentage, right? Maybe 10 basis points. Might even be less than that when we first get it. It's not gonna be much, and so it's not gonna be a shock or something like that. So again, think about how the market's priced in right now, and that's where we're going to hear talking, and it may seem like, oh, is this good or bad, or is this different? It's important to remember that a lot of those outcomes are things that we're pricing. And so I think today is going to be a little strange in that aspect because the last FOMC meeting and before we just keep getting the same answer. We're going to get a different answer, most likely, a different tone. But remember, we're priced that in. And so I do think we're going to have some little rumblings and maybe retail traders make some different little moves in the market. Maybe we lose some demand at going into 2:30. Again, 2:30 is what matters. 2 o'clock, we get the statement. It's really the Q&A, the conference that matters. So keep that in mind around 2:30. So we saw yesterday, again, if we just look at sort of the day, we didn't do anything, right? We're going into FOMC completely prepared, right? Everyone traded flat. Nothing really happened. That allowed us to take advantage in our own tickers and have some fun, do some different trading during the day, get set up just for some future moves that we believe are going to happen this week. We'll talk about that. But so we're pretty flat going into it. Futures right now are break even. We're not seeing anything. Bond market hasn't budged. We saw Bitcoin come down a little bit more below 40. Gold is completely set where it is. Dollar's barely moving. Basically, everybody's just ready to wait until 2:30. So we're probably going to do nothing all day. Again, as a market, that's just sort of where we are. That's again because we've all prepared and positioned for what we're going to hear. Let's say we get a surprise, right? It's important, again, that we remember what we're doing with our positions. Our long-term positions are trying to accumulate value over a longer period of time and will not be affected by anything today. So that's things like energy. I guess the bank angle could change if somehow we get some weird statement that we're never changing interest rates ever. They're going to remove the idea of interest rates. That would be bad for banks. That's not going to happen, obviously. But in terms of the long position, everything stays the same. Those will not have to change. On our riskier positions, those of mega caps, which are now sort of solidified themselves as a major part of portfolios, once again, specifically for me at least, probably for most people. And that growth side of more short-term risky, this is the side that's going to be sort of, a little bit bendable if we need to do something. If we get a bit of a surprise, you're going to see take profits come through on tech. Again, when we look where we are, I mean, it's hard to tell how much that would mean. I'm not sure. We have support here. And so when it comes down to a question of how much could you hold, again, it comes back to your position, where you entered, and what you think your timing is. For my mega cap positions, I would hold it on to about a 2% pullback because I'm up a significant amount. Again, sort of since this area here in the low is when we started entering all the mega caps. We've held those positions. From everything we've talked about, I've talked about not transitioning the mega caps. We keep pushing those. Uh, if you had entered back here in May with me, then we would sit through a 2%. Do you really think a 2% pullback is going to happen at 230? Probably not, right? But worst case scenario, that's the idea. Okay, so worst case scenario, if there was some weird surprise that happens from FOMC, then there you go. So that should give you an idea of the risk that I'm willing to sort of hold through. That's not going to happen. That's worst case. I think today's bland. I do think today's more bland than expected, and I think what's going to happen is what I've talked about leading into it is this very low, very low volatility in the market. We're trading through all-time highs, right? We're very bid, trending, putting ton of points on every day. Took some profit yesterday going to FMC. Look at the spot VIX, right? It's basically at the lowest point we've been uh, for a long time, at least for COVID era, and it's back to where we were before COVID, right? That's just where we are. What I think is that, again, this is not really correct, but when we came into FOMC, we had very low implied volatility, which is an interesting sort of dynamic to I guess have going into what should be an important meeting. You should have some volatility being priced in for this event. FOMC and everything here was not priced into options with IV. And so most things have a pretty low volatility. I think you're going to get an increase in volatility today from the meeting, and that should offset any underlying loss. But what it should also do is if there is just, again, if it is bland, you're going to get that extra volatility pumping up that underlying move to the upside. And so we've already talked about how there's a ton of calls expiring this week with the monthlies. That acceleration we should get from those options and the move here coming from if things are bland and the underlying just keeps trending, what you're going to get then is also the addition of added volatility going into the meeting, going into, not into the meeting, but going into the statement, going into the conference, getting questions. During that time, we usually have some volatility in the market intraday. That's exactly what you would need for IVs to spike and get into this gamma sort of event I'm talking about. That's for a bland sort of thing. I think that's more likely than a situation in which, again, there's surprises or anything like that. I don't think the market so much, if you look at this where we're looking at price, I don't think the market really looked at this as being more important than the inflation numbers we just saw, right? When we saw those CPIs, the market thought that was more important than this FOMC meeting, even though it's still important. So that's where there should not be so much. There's going to be more eyes on the FOMC meeting than ever, as always, but it should not be something in which it causes a big switch. And so I think that's the important thing here, because things can look that way. It could definitely look that way at the moment, but think about all the different volatility situations going on right now. And that's where you could have these moves happening intraday around that time that, again, think about it just intuitively of what exactly is that. If there's take profit in one area, is that money going somewhere else? We're going to see shit like that. We have this morning, when we look at sort of pre-market action, we have mega caps, things like Apple coming up off the low of yesterday. We have travel, for instance, putting points on. Energy continues to explode, right? If there was some sort of, again, if things were going to change, then energy wouldn't keep being bid like this, right? We're doing a lot of things that are sort of contrary to some of, I guess, the ideas of being worried about something happening. again, that could be people being naive. Maybe I'm naive, but uh, the entire market then is being naive, and the Fed would also be naive for continuing to tell us that this is transitory and that it's not going to have an overall effect that is going to negatively hurt us, right? These things are all connected, right? And that's just like the bond market doing nothing. And so, again, there is a point to be made about the way in which speculation and betting actually causes events to happen. If the market was pricing in and we were going haywire over here, we were pricing in that we're going to get fucking ruined by inflation. We have insane amount of, again, if we had like an insane amount of volatility in the market, we had no idea how to be positioned because this goddamn Fed keeps telling us all these lies, right? And the market's all over the place. That would cause the Fed to say something, wouldn't it? Because they love to react when there's something going on. That would come true. And so just like that would be true here in the market being so stable, just trending up, everything's bullish. The Fed reacts in the same way, and that's why they continue to basically, uh, they're holding us, right? They're being like a nice little comfy cuddler with us, right? That's literally their role right now, is to just make us feel safe with our decisions, and that's what they're doing. And so remember that bet side. Again, that's also what our idea is with this options market right now, is the way in which that's going to impact the move and how it has impacted the move. Keep all these ideas in mind, because this is also the angle at which we're looking at sort of with policy, with government, right? The government's doing it because people want it, right? These things continue to overlap, and we're looking for these big idea focused sort of reasons, at least, for why we do certain things. It's no longer really, I would say, a negative to be doing what the rest of the market is doing. You don't need to be contrarian all the time and be like, well, what are you idiots doing, right? That's not how this works. This is not a situation where when retail traders are all buying meme stocks that we call them stupid, and that they are somehow ignorant to what is going to happen. We've seen that as long as all of the market sort of agrees in consensus buys, prices will rise and can actually hold. And there is not sort of a situation in which it negatively impacts markets, right? This chart is completely different. Look at this AMC chart; it's completely different than January. This is it's consolidating. It's setting trends. It looks like the S&P intraday. These sort of things. This is even an example. It's down pre-market right now, 4%. Does that number matter? Not to this move. It's setting, again, a sort of a precedence of just, there's nothing wrong with this, right? Maybe it's just for fun, but there's nothing wrong with it. And you can use that same logic for why there's nothing wrong with continue to push price to all-time high. You're not inherently, again, putting yourself in a position where now you have more to lose. You gained more. You gained more. Yeah, you have more to lose because you fucking have more money, right? You get a little shack in the middle of the woods, and then you buy $1 million house. Yeah, you have more to lose. You get a house now, right? That's just how things work. And so, again, there's nothing wrong with these things. So uh, when we again get articles about how inflation is going to cause a change of things, we know that shit. We know it. We know. We got it, right? And just like markets going through the high, we have no anxiety right now. It's going to come up again. We're going to get the bubble thing. You're going to hear about the bubble in the housing market, even though everyone knows it's not a bubble. These sort of things are going to, again, happen. Just keep in mind what we're doing. We're trying to, again, stay with the macro reasons, the big ideas, and use the price in front of us to just, we're just going to go with it. It's crazy not to ride it and be a part of it. So, again, the best thing to do is to continue to be aggressive, continue buying, have a portfolio that can, at least always be in. You can always at least put your cash in, continue to take that. And if your money's not in the market, you're losing money, literally right now, at least in the economy right now. And I would say we've got about a year, right? We've got about a year, and so 2022 again is when things will change. So, enjoy it while we can, right? In terms of new risk active trades today, we do have some. Again, we had some moves yesterday that we had some pullbacks. Looking to possibly take advantage of some of the growth stocks that sort of came down. This is more retail focused trading. Again, things that are more options specific in the way that I think things will move. If we get some continued momentum, we'll keep my eye out. Again, yesterday I was pretty aggressive with just trading during the day. I think again, this sort of proxy between what we have with FOMC and then this idea of a game event coming with the close of options this week. I think this is a nice little hot time that, again, you're going to have spikes in volatility. It should be enough to be able to play just about anything. So, again, you see things making moves and you want to be a part of them. I don't see any reason why you can't this week. There's plenty of action, plenty of things going on. And again, it doesn't necessarily need to be something that you think is going to go up next week. Could be just by the end of this week. And so those are things right now that I think can still be taken advantage of, especially with so many macroeconomic focused ideas right now. The micro stuff sort of falls under falls underneath it. And no one really takes it that to heart. And that's where you can really just at least take action and make some plays with options right now. We're gonna watch the bid. We're gonna watch maybe not the bid. It looks like it's gonna be bid in the morning. But again, I do think we're gonna be pretty slow, choppy going into FOMC. So again, I mean, if let's just be honest. If you haven't bought anything and you haven't been in the market, I don't know if you want to do it this morning. Maybe just wait. You waited for months already. You might as well just wait now. Because there's going to be no liquidity, there's going to be nothing really happening. And so otherwise, we are buyers and then holding our positions, right? But I don't really, again, see much happening. We're going to watch. We're going to take a look, take it step by step. It's not going to look like this probably. This is usually the day going at FOMC. It's probably going to be a lot flatter than that. And so we will see. We will see. Again, everything's just sort of. This is, again, the funny nature of our market is that we have this window of time that we're trading in. But there's, again, we only trade it open. Basically, the first 30 minutes is when you have the most volume in the open. And then the most volume during the day is basically the last 30 minutes of close, right? And that's the only time we want to trade. But then you have an event that happens in between those things. And then you go, oh, shit, now I have to wait. So now you're going to have no volume at open, which again pushes all the volume to close, which is again why you're going to get those, when we look at FOMC days, those very big intraday moves that happen around it, because those are all the opening morning orders, right? That's all the orders that were supposed to be there at open that had to get pushed because everyone just waits anyway, because there's no reason not to, because everyone else is going to do it. The only reason we trade at open is because everyone else does it, right? The only reason people close out positions at close is because everyone else does it at close. This is, again, there's no way around it, right? What are you going to do? You're going to make up your own rules and decide to buy and sell when you want. We have to, again, acknowledge the timings. And so in terms of timing, see you at 2:30, right? See you at 2:30. Should be good. I am interested to see if we get, again, there's possible you could get some new sort of rotation before. Maybe we'll find some new bets, see if people are putting new bets on. It could be things specific to banks. Again, if there are a lot of bets that we're going to get interest rates rising sooner than later, even than what the market thinks right now, then you could get some spikes in banks. Banks are at a nice buy point. Talked about JPM yesterday being at that support. These sort of ideas, right? It's down pre-market just a tiny bit here. These are interesting spots here. So again, there are ways in which you can take an opinion and speculate on it, right? If you think something's going to be different, this is still a good buy here, even with the average consensus right now, right? Again, this is money that has gone into growth. And so maybe the same thing with growth. You don't actually, again, think, I don't know, that I guess you don't think that the mega caps will continue to grow. You think, you know what? Apple's done. To be honest with you, Apple's done. They're gonna stay the same size now for forever. If you think that, then I mean, you could probably just leave it alone, take the profit or short it. Um, Again, if you don't think something's gonna grow, then you short it. It's sort of the idea of growth. If they don't keep growing, then they're actually losing value. Right? There it is. You ready for these floodgates to open right here? By floodgates, I mean like a couple drips coming out of a faucet. It could look, you know what it probably look like? The melt up lunch that I always talk about. I wouldn't be surprised if you just get this the dirty melt up, right? Again, when you're an all-time high, what happens during lunch? We see it every time. All-time highs during lunch, you get melt ups because no one's active, but you have no supply. There's no resistance, and so things just melt through the highs. The demand, you don't even need much demand. If no one's going to trade this open because we're all waiting for FOMC, what's going to happen? We're we're in all-time highs. There's no supply. That they could have. I think there are going to be those out there keeping it break even. But again, the reason for that, the reason why you stay flat is because trades are staying at an equilibrium, which usually if you have less volume, you would think of higher spreads, but people are not trying to go one way or the other right now. So again, that's sort of why we get these sort of just completely flat days going into economic events. But don't forget about your own tickers, right? We've got Ford 1% so far. Nice buy on that low 2 days ago. GM over 3, CCL 2%. Again, it's sort of mixed on travel actually. We're not full. A lot of software companies, tech side, getting 1% or so right now. Let's see what's around our break even right now. Everything around the break even here today. All right. And then we'll be looking again for some of those low buys probably later. Take advantage of some volatility. I, of course, talked about some positions from yesterday. Looking to push and have some, uh, hopefully some interesting volatility come through. Push those up. Look good so far this morning. CCL over 2. In terms of this overall sector, they all look bid, but we will see. This is sitting on its support. Candle looks a little extreme, but it's not exactly that extreme. Go over here. Let's see. AMD, good job, guys. You listen. You did a great job. You did a great job listening to my advice. You said, you know what? This guy is going out here and buying options that expire this week in a few days. And you said, you know what? That's the kind of thing I like to do. I like to buy something that's completely worthless right now because I think it's going to become worth something later. That really makes me feel good that you guys would have that much confidence to go buy this pretty silly play. So good job. You did a great job. My account will thank you when we take profit on those. Nice move by semis today. Nice move. That's what we like to see. What we like to see. Average is 0.5% right now on the market for semiconductors. That's great. This is also in here's one interesting thing that we've sort of been talking about is we are seeing a very similar move in those places which require the most semiconductors, sort of being automobiles, which have had a shortage because there's been a shortage of semiconductors, right? And so we're seeing a bid all together here. Now, how are these tied to the way in which the economy is working right now, right? What does inflation mean? It means that there's just more demand, right? There's more demand in the market right now. And so what does more demand continuing to go up mean? Well, people are going to buy things, right? That's pretty good for the good old automobile, right? What was up the most in terms of inflation? Automobiles. Automobiles were. So we're still seeing things that are tied to those numbers continue to make moves. Why were retail stores going up, right? Because people are fucking buying things at stores, right? These, even though these are again just ideas and fundamental ideas, these are things that we just know happen and continue, and we can actually see happening before they really get going, right? And so we are seeing some of these things, and it's always on economic event days that we get that really big open sort of move. So a nice sort of move on this chart to get us out of that low. Again, we took the trade over here on the low. That's a pretty good spot. It's a pretty good spot. Just send us through. Just keep putting the points on. That's all I want. Keep us going. Nice little short little doji. Look at that candle. Hard to even see it, to be honest. Oh, here you go. You think we're doing anything? Don't look like it. But we're getting moves on individuals. It's great. Airlines are picking up finally. Airlines picking up. Mostly everything that we see is on a smaller scale that's putting points on, which makes sense. I mean, that does make sense. Anything tied to larger portfolios, anything else is not moving. No one's touching anything. No one's touching any of that stuff, right? Things that are moving are those in which are taking some profit. Sense. Drop has continued. Again, this COVID winter thing, I'm not sure the consensus across the board, but we've talked about the larger names that have been doing well. We do see Etsy making a move in conjunction with sort of that today. This chart though is garbage, right? We've talked about some of these. These are just bad. They're going to wait. You have to wait until they get up to here. But again, on a day that no one else is really doing anything else, we're buying COVID winners, and so we continue to look at it, see what the number is per day. For instance, you get a 1% gain today so far on Etsy, but you had 2% yesterday. These sort of things, right? Well, that's not a very good average, so still waiting on some of that. Chegg we talked about as well being a little bit better, right? Looks a little bit better. This again, anything that's at that low, that's had sort of this accumulation phase down there. Talked about this head and shoulders idea across the market. Everything down there, if the market continues through all-time high, will come up. That's how things work, right? They will continue to move to the upside. These interesting candles on Amazon. Tesla break even. Let's go take a look at some flows here. Gold, not moving. Bitcoin, not moving. The dollar, oops, not moving. There you go. There's no money entering or exiting. No one's doing anything. Money's not going anywhere. The only thing that's going to happen is just rotations inside the equity market itself. Right? Bonds. Want to take a look over here? Nothing. Break even. Nothing. So 10 minutes into open, no one's doing anything, right? No one's touching anything. That means we just stay with the trend. So Again, it's gonna be a little dry, folks. It's gonna be a little dry. I do like that we're getting some moves on some of our individual tickers, things that are, again, they're not. I shouldn't even have said that they're like connected to the thing today, but charts that have their own velocity, they don't need to wait for the market to make its mind up right today, right? A lot of these things are not even tied. There's nothing that's even going to be affected on them, right? Think like meme stocks. Meme stocks they don't give a shit what Powell says. It doesn't matter. None of that matters, right? And so like things like that again they're in their own thing. They're doing their own thing. Most of the things we see at the top list here, I would even put uh, some of at least the automobile move into a technical standpoint. For instance, Ford was taking profit over a week. That pullback led to buying at a low, so now it's got a little bit of a pop. That's why I got some extra attention this morning. That's going to go away as well. Like again, these are very open specific sort of things. So it does look like we're going to be in the old paint dry section. Does look like it. Anything good on the sell side? See. In terms of commodity driven, let's see. Is this the candle we buy X? It's shaping up more to be a weekend trade. It's still a higher low today. Do commodity traders care about asset buying interest rates? They care about the inflation discussion, so they don't really care what Powell says. We already get the data on inflation. So I'd say this side of things is still the same because we already saw the inflation numbers, which inflation's going up. And everyone likes commodities through inflation because if prices are going up, those underlying commodities that build anything are going to go up as well, which we've seen. Where's this at? This is an interesting candle on Neo. I still have my position, so I 2%. But in terms of where it is in an interesting spot there. If we look at where this was, trying to continue to come down today, right? These sort of things. This has been unhelpful to our understanding of the relationship between Chinese tickers and New York Stock Exchange Chinese tickers. And NEO is the one that actually continues to go up. So who knows? While EVs go down, right? Who knows? But that's not a bad candle there. Not a bad candle at all. If that candle had started above support and then engulfed that entire candle from yesterday and started to put points on, okay, that would be worried. But this is a little doji in the middle of nowhere, reacting to some averages. So nothing there. Everything is around this. Again, we have this -1 to +1 sort of range. Still going to FOMC, which is interesting. So much around break even zero. More things are going to the upside overall. So again, we're still seeing that just sort of melt factor of all-time high on an average. K, we like K. Anything that starts to make a little bit of a move, I would not be opposed because I don't want to sit here and do nothing until 2:30. We see a little volatility come through somewhere. The ENPH just broke through here, but we're already in it. Semiconductors are the only thing making moves. Roku, look at this candle on Roku. That doesn't tell you that you're not doing anything. There you go. You bastards. PDD is coming off the low. Again, Chinese tickers. What is this candle? What are we doing? I've had enough. I've had enough with the Chinese tickers in our market. What are we doing? I say they go up, they go down. I say they go up, they go sideways. I don't say anything, they go up. They don't care. The market goes the the tickers on the Hang Seng or on the rest of the Chinese exchanges, they go down, and then they're on the New York Stock Exchange and they go up. Like it's the same company that's traded on two exchanges. One goes down, the other goes up. What are we doing? Hello? It's because people are bored. They have nothing else to do, I bet. Okay, fuck me. Well, there you go. Uh, everyone's buying some Chinese tickers right now. That movement looks completely different than from what we've seen uh any other time in the last, I would say, month. I'll be honest with you. It's not putting many points on or anything like that. Just that movement on a day like today when no one's doing anything. Okay. Maybe that's why it's moving. I'm not sure. I mean, the only thing that are moving again are semiconductors, which makes sense, I guess. When you put the idea of what I've said with options, this should be making some move. Now is 526. Okay, let's see. Can we catch? Trend line on spot is 246.75 today. We'll see if that gets interacted with later. In terms of Xilinx, let me turn the screen. On support, I don't think I like this chart too much now. It's just traded so flat since I looked at it. Nah, we'll stick with the others. Stick with the movers. It's not moving, I don't want to be a part of it, right? Right now is all about things that are going to actually have volatility. You want to buy things that have low volatility to go into high volatility, but if it doesn't even have anything over the last week, then, I mean, not sure that's what we want to be a part of. We can't really afford to sitting something that's not moving if we're considering it a risk buy. Because again, if you put money into something that's not beating the mega cap moves, then you just lose money. Reality. All right, let's go win. Give me the points. Now, this position we've stayed in, right? We get stopped out, but I've sort of talked about this with all of them. We are buyers of travel. We are getting help from IVs, and so most of those are being held through. Talked about like on AAL, for instance. Most of those are being juiced up a little bit. It's definitely nice. I'm just trying to go through things and see if it looks like everything is just doing the melt idea I was talking about. United has a nice move here from the low as well. Again, we've had this sort of consolidation for a month or so on our major healthcares of UNH and Anthem. Ready for their next move. Talked about how again those are must be portfolio holders. Must be. Gotta have those. SunPower, 3% today. Okay. Clean energy, we don't understand either, so you know. Don't if you're looking to figure out if solar is going to go up, this is not the place because I'll tell you one thing one week and then another thing the next day. So LED are coming off low there. I think they're tied to finance on a tertiary sort of side. Seeing some bid, we've seen some things so far that are making moves, and it's hard to tell. Hard to tell when no one wants to do anything. I mean, look at you can't even tell what's the candles. Where are they? What are they doing? That's because these are 1 cent spreads, not over just asking bid at the current time over now 20 minutes. Not much. Not much. All right, let's see if we can spot anything in the bank side. So we have some selling of banks, right? This nothing wrong with that. Making sense going into FOMC. This is people, again, those in which trade around events. So again, that's going to happen. You have people taking profit on banks because they're not sure the Fed is going to say exactly what the market thinks they're going to say. So you have those that take profit. We see that. And if you're already in banks, you can't buy more, right? Keep that in mind when we look at this. Again, it's the important prices are the ones that are around the 230 mark, 2 to 230, and then through that conference, that's when the prices will be pricing in actual things that matter. Right now, we're getting those risk averse people. We do want to keep it into a calculation of how much is actually being a part. Again, I don't think anyone actually understands how much again, this idea of this value portfolio, right? I don't think any of us actually understand how much is actually purchased across, right? What is everyone's percent right now? I talked about like mine being 90. Now it's shifted because we have more growth. I talked about even yesterday that as a position gains, it's now taking more of a percent of your portfolio. Where are we now? What exactly is this number of how many portfolios out there own banks? And how much percent of their portfolio is it? These sort of things, again, what is 1% here? That's a fucking hard question to answer. But if you knew these things and if you're able to stay on top of them, then you can understand how much is too much and what should you be buying on at certain times, right? And that's how we find out when do we put new positions on, and we try to figure out what the flows are and okay, how much just got sold? What's the actual amount? And then how many other portfolios out there are going to look at that and say, okay, that's an opportunity for me to add on, or okay, I'm going to need to take some off because now there's a certain percentage of the market, right? If half the people in a room, are crazy, then I don't want to be in the room. Or I guess what you should say. Here's what you say. You're in Times Square, and then you see hundreds of people running. They're running and screaming. You're going to start running and screaming with them because you have no idea what the hell's going on. Stampede, right? You're like, Jesus Christ, what's going on? And you just start running. If I saw one dude running butt-ass naked through Times Square, running, screaming, no, go, we got to get out of here, then I wouldn't care. I wouldn't even look at him, right? The market does the same thing, and we try to price in this calculation of, okay, how many portfolios are doing something right now? And you try to get that, always approximation, but something to keep in mind. Because here's the... oh, I hate these days when no one trades the morning. Being specifically such an open trader, I think that's sort of, again, most trades are done at close, right? But I'm open centric. I talk about how like we'd like to have the whole day ahead of us with our position, and we can manage it from there. And we try to capture things, right? We're trying to capture, not chase. And so, but having days in which no one does anything at open is, oh god, it hurts. What are I can't even. These are the worst 5-minute candles. I just can't look at them. Jesus. Here's 15 for you. Do you like this, guys? This is really nice. At least the backdrop is interesting. We understand why. Definitely interesting. I wonder how many tickers are going to be over 10% today. I will bet on our list here. I'll bet on our list here that at least 5 are over 10%, which happens maybe 10%, 5% of the time. I would bet today you get at least 5 over 10%. Right now we have AVXL that's at almost 8, and then 2 others that are over 5%. So most things here would need to put quite a bit of fucking points on, because 20 tickers down is at 1%. So, but I think you'll get about 5 tickers at over 10%. I think there will be things that are going to get a shit ton of momentum. You have things like DraftKings coming off that low that could put 10% on today, just because it took off so many points yesterday. Things like that. I did put that on the short-term patterns. I talked about how I don't really want to trade it, but it's really there was nothing wrong with taking that trade, right? Nothing wrong with taking that trade. It was the timing. If you didn't buy it at open yesterday, that was the problem, right? And so I talked about putting my positions on right before lunch because yesterday we sort of had that pullback. If you're able to buy this, I mean, at least before 11 o'clock, then that was pretty good. Today it's hard. This sort of thing here is it probably will go up on the underlying, but the options are a little iffy to me. Everyone's going to buy it to take profit on it immediately. Those sort of things are not easy. Humana chart doing well today, 2%. Again, these healthcare things are, I don't really need to post charts on them. They're pretty straightforward. Pretty straightforward. Pretty straightforward. Again, this is very different compared to when we talk about pharmaceuticals and sort of what's going on with a lot of the short-term bio plays. It's important to note how different the ideas are there. Again, the idea of these big healthcare sort of providers, the services, in sort of the nature in which they are almost holding companies, right? They have hospitals, they've got insurance. There's so many different ways in which they're sort of connected. They're very value oriented. They're very tied into what's going on, and so those are slow moving juggernauts, right? And we trade them very slowly as well, right? On the pharmaceutical side, there's a new idea every day. Those are traded as risk assets. I love this move. Happy with that. And we're getting it on. We're getting across Anthems at 0.5%. Looks good. Oh, I wanted to say UNH. On the sell side, anything new? Retail traders down 9% on AMC. Still in here. Z is at 1%. Again, this chart as well. It's just you need to move out of this range first, right? I've talked about this on some charts. Once it comes out of the range, right? Just sort of this range of these highs and the lows here. You're just sitting, you're not doing much. Then we can make a decision to do something. We can't sit in this position for a month if it trades flat for a month. There's things we can make money on right now. We can't put money here. Even if it's a small amount of money, it doesn't make sense, right? 1% today, it was 4% lost yesterday, right? These sort of things, again, you can't figure out when it's going to go up and down every day. That's not going to happen. But I guess there's someone out there that has basically become rich from playing roulette, right? Maybe they started with $100 and somehow have hit the right roulette number multiple times. Except now do that every day, day trading. And then every single trade you make is the same thing. Very unlikely you become a millionaire doing that. Don't think so. Luck is definitely involved. Harnessing luck, though, is different. We got, some of the more value oriented tickers are doing a little better than growth this morning. I'll be honest with you. AZN has continued. Of course, a little bit different than what we saw with the others. Again, we had the new vaccine come out, 90% effective. We had a whole rumble in the market. AZN has continued. Looks pretty good. Bam, nice start to us for today. Charts from yesterday are pretty good. Humana, 2.5% so far and launching. Bam, almost 1%. ETN sticking in the flag so far. Whether or not that's tied today, not sure. KMX sitting here for today. LC barely budged. These things make sense. KMX and LC at least they're related to things today. ETN is not technically related today, so it's hard to tell. Purely technical, but other two make sense. You love to see it. When's the last time you put 2.5% on? We're going through the high. In a minute. Mega caps continue their little melt. Apple, 75 basis points, almost 1%. Amazon, the same. Microsoft, the same. Google, completely break even. Facebook, completely break even. Tesla, completely break even. These are, that's it. That's all you need to see for growth right there. And if you can get Apple and Amazon going, with a nice little melt here going into FOMC, even if they lose a percent, it won't matter, will it? So that's exactly what we want to see with these positions, because these are again important to our portfolio. I think when you think about it, these are the ones that the thing that comes from the low, right, and then is going to the high is always going to make us a larger gain, because again, it came from a place that people were not thinking it was going to go up. Our other value positions are things that just continue to go through the high, and we're just holding it because everyone else is. Those are not making the same percent. These are exponential, and they're fucking big, right? These are the biggest companies in the market. You make a lot more for basically holding it, right? The longer you hold it, the more it's going to pay you, if you have exposure to it. So those matter a lot right now. I would say in terms of significance, right now mega caps have the most still, which is usually the case, but it was not the case in a month ago. So come on, Blade, give us the move here. I like that chart. What I was gonna say was ZDG. Let's take a look at this weekly chart. This on the weekly. In terms of weekly charts, we've been doing very well, and it's unclear. It's unclear why the success rate on some of the weekly breakouts have been better. Again, I just draw lines on what's happened in the market, right? Why are we taking breakouts so, strongly across the market on a longer term perspective? We've been talking about for a month or so now that most orders are tied to this weekly perspective. You'll see them all come in on Monday, get set up for the week, and make decisions on a Friday. So they're actually trading a weekly chart, right? They're actually just, these institutions are looking at things on a weekly perspective. So they put a weekly chart on and they go, okay, yep, let's take this breakout here on Monday, and then by Friday they're looking, can we continue? Yes, continue it. Should we put more on this Monday? Okay, yeah. And so again, that's actually happening. So that's sort of maybe why when we look at things on a weekly sort of sense that they continue to break out from there, because just about every weekly chart we've looked at has performed very well. And it's, again, it's hard to tell just how much of that is tied to, so is everyone else, right? They're all looking at the weekly chart as well. You never really know. It definitely would be a mistake to think that people are ignorant to patterns that are in the market. So breakouts specifically. So we're picking up. Let's go. Let's go. Keep giving us all-time high. Give us as many points right now as possible. That's what we want. Just give it to us. I'm wondering if we want to do another home builders kind of move here. today before FOMC. The big head scratcher, that's for sure. Do we want this today? It's so bear flaggy though. Ugh. But it might be some good risk. What are the chances Powell says something about the housing market today? That's the question. He doesn't specifically need to for home builders to pop off here because again it's tied to the interest rate dynamic completely. So with banks at least, and the way loans go out and everything else. Like how does don't know. I feel like this might be we did this last time. If you guys remember our bet from 3 weeks ago, or about a month ago now, what we did was going into some Fed talks. We bought home builders, and we made quite a bit. Not to use that as the reason why, but we are trading completely flat. And it has a great macroeconomic sort of reason, big idea focus. It's not a housing bubble. That should be enough to buy. It's how short term is this? If this is a long term position, I don't want it. I'm not going to buy something new that I'm going to have to sit in for a month. But if I can take a nice little risk position for this week, just betting on this literally going up by close, push it through the end of the week. Fuck. Okay, let's do it. All right, let's do it. The usuals. DHI is your individual ticker. You've got multiple things you can choose from, like ITB is the construction. You've got Nail, which is a nice leveraged home builder ETF. You can see they're all trading about the same right now. Hit that ask button. Hit the ask. Get me in. Put me in. Nice 10 o'clock buys, you know? Put the market on here. Nice little 10 o'clock home builder bet into FOMC once again. Nothing like a consistent trade that you do the same damn thing over and over, and if it makes money, it makes money. I mean, everything's going up right now, so if home builders go up, it's not because we were correct. Everything's going up. So remember. Markets goes up. All right, we got our first over 10% ticker today. AVXL is at 11%. All right, that's 1 out of the 5. What I want is everything. I want Apple over 10% today. If Apple went over 10% today, I would jump out my window. I would quite literally jump out my window if Apple went out of 10%. If Apple went over 10%, you know what I would do? I'd go buy a lottery ticket because I would basically have as much money as that lottery ticket, and it would feel cool. I don't think I didn't. What was I gonna say? I think most people that trade like the idea of lottery and gambling. I'm not really a gambler. If I go somewhere, it's for a vacation, just for fun. But I do, you know, I like Powerball and Mega Bucks tickets, Mega Million, not Mega Bucks. Wonder how that idea settles with other traders out there. You know what it is? It's when you're in a position and your position could fucking explode, and that's why you buy it. That's the same feeling as buying a Powerball ticket. Maybe that's why. That's probably the connection. You buy a Powerball ticket, you're not going to win. But you buy it because you're basically forcing yourself to think about it, right? Same thing when I put a trade on and I'm watching it really get momentum. I'm looking at it as, okay, this could be the trade that's really going to, that could make me a ton of money. That's what retail traders do. I could get rich right here by buying GameStop. That's true. You can. You should buy a lottery ticket too. And what if I told you we could convert the healthcare system in the United States into basically how Powerball works, where everyone is putting their money into a pool, and anytime you need to spend money for a health reason, it takes money out of the pool, and it would be less than your current health insurance. See, you could be buying lottery tickets, healthcare, stocks. We could just put these all things, put it all in one. Can we just get a? Can we get a market? Can we get stocks, lottery tickets, and healthcare all as one? Can we just get the bundle? That's really what we need. Let's go, let's go, let's go. Trade flat, do something. Nasdaq with the bid from mega caps. We saw that earlier. Banks, when you look back at banks, 90 basis points down. Does not look like there's actually anything happening here. If you look at volumes and things, no one's actually doing anything. Again, some being the most bullish of sort of sectors that go into it's not bullish overall, but the thing that's most connected to today is banks. So it makes sense that the move here. Whereas growth is a discounted sort of idea, and you're not going to actually see that. That would be in the future. That would be discounted. So just like tech did well during COVID. They do well during anything. That's the point. We saw Chinese ticker slow down there at 1% or so. Square Rank coming off 227. That looks like a nice move right there. Definitely a nice move. PayPal again being the leader on this. Turn this bad boy green. That definitely looks nice. I like that. Whatever that is. Nice bid. 245 is the range. You know, it's some of these are we're this week again. I've talked about if we get this gamma move, some of these are gonna trade through this entire range, and so if that happened, right? So again, be looking for the charts that have this sort of support to resistance that's less than 10%. That it's unlikely that you put that many points on, but it's definitely in the realm of possibilities. If you get some big moves that come through. Right. DS trend line is something to keep aware of. 219. It would be more bullish if it's within this channel. So this chart's already been very good to us. If this climbs inside here, that's even more bullish. So some of these tickers are reaching their limit, but then they have a new sort of leg. ZI as well. ZI is 48 resistance. See if that does it. Some of this shit looks really good. Love it. Happy to be a part of it. Questions on solar? Who knows? We've said it's being bought and going up, and we've bought. This is the thing. We finally get the moves, and we finally go and buy some of the shit, and we just stick with it, right? It's why the flip-flopping, you can't choose when it's going to go up, when it's going to go down. We have an idea. We think it's going up. Stick with it. After the SAR's on support, that's when you're supposed to buy things, right? So yesterday, what do people do? You buy support. Best day to enter is yesterday. You don't wait to buy it open. You buy it the next. You buy it the day before. If these don't go up, there's nothing. I can't help you. Don't know what the market's doing. Clean energy. I think we're waiting on government. We're waiting for those policies to go through. Just I don't know what the timeline or how you do these things. We could honestly build enough solar in the desert to fucking power this entire country. And it would cost less money than what we're paying for the infrastructure bill. I mean, I don't know. If we really wanted to do it, obviously we could do it. So again, it's not a question of if, it's just all right, when are we going to get around to doing this? So, because we've spent so much money to act like we can't just convert everything it's honestly the dumbest thing in the world. It's so silly. So again, it's what are we going to put for a timeline? We're going to wake up one day and you know what China's going to come out for news? Is China's going to tell us that the entire country is powered by renewable energy. I bet you that will happen. I bet you that will happen. Just one day randomly, they're going to come out and say, our entire country is powered by renewable energy. Right now, it's not. They're fucking polluting everything else, right? Just like the rest of us. But that would be the place that would do it. Because you know what they would do? They would do that, power the whole country by renewables. And then you know who's going to sell us all that technology? Really, I mean, we already invented the tech, but who's going to sell you all that shit? China will. And they will have got the cost down by so much that they can sell it for fucking amazing profit. Why do you think they're in Africa? Why has Africa been sort of the target of so much international focus in terms of creating new infrastructure? And China specifically has created massive sort of ports in sort of everyone has seen sort of the new Silk Road sort of idea they've made through from China to the Middle East that's now goes all the way to Africa, goes into Europe. Wouldn't be too hard for them to just go throw some solar panels down in the desert. Power all of Africa. What happens when one country supplies all of the energy to a continent? I'm not sure, but if you supply someone's power, do you have control over them? Probably. All right, we have 2 tickers over 10%. Geo came out of nowhere. Nowhere. I like it. Good predictions. Well, we are just melting through all time. Oh, I've got a new recommendation for you folks. This is not a buy it may be a buy recommendation. In like one way. What I've been doing recently. Today I decided I really like it. I'm instead of drinking coffee, like taking the time to put the beans into the machine, right? So you put the beans in the machine and you got to turn it on, put the water in, have it drip there for, a couple minutes. Have to drink hot coffee. Now I love coffee, right? We all love coffee. But you know what I've been doing? I've been skipping all that. Why do I gotta sit here, wait for the hot coffee, and then I gotta go grab another cup? It's hot, I like black coffee. You know what I've been doing instead? I said, you know what? Screw that step. I've got the bag of coffee beans right here next to me, and I just eat the coffee beans. Straight up eat the coffee beans. You know how much quicker you absorb caffeine by eating it? It's instant. About 10 coffee beans. About 10 coffee beans is a little over an espresso. Just eat them, chew them real quick, drink some water, you're good. 10 seconds, you're going to be feeling like you just drank an espresso. A little bit more than espresso. So throughout the day, you just kind of eat one coffee bean, right? Eat a coffee bean every 20 minutes, you're good. That is my new method. I'm going to just tell people I've been doing that in my entire life, and that's when I finally go out to eat again, right? They say, "Oh, what do you do?" Like, "Oh, yeah, I make money in the market." Oh, wow. That's really impressive. That's great for you. Like, I'll tell you the secret, though. I just eat coffee beans. I tell you. Goes right to your brain. It's all the pros and cons of drinking coffee just by eating it. It's just quicker. You don't have to eat it. The thing that I like though is that instead of having to use like a ton of scoops of coffee for every pot of coffee I make, you can eat like uh the amount of beans you use it's almost like 10 times as less the amount of coffee beans you actually use. Because if you eat fucking like it's like 5 coffee beans for a regular cup of coffee. If you eat 5 of them, there it that's a big difference compared to how many scoops of fucking beans you have to put in there. So or ground coffee. That's it, boys. What you get for today? My wisdom. Otherwise, we're in for the long haul. How many hours we got? 4. 4 hours. Okay. 4 hours. Meme stocks kind of have settled at that take profit point. I love the move on Megas. It's great. Continue giving us the gain. The other thing to be aware of is that since we're going bid on growth right now, if again, if you go bid all day, you're going to take profit at close. It's important we do not find correlation when there is none. If growth goes up into FOMC and then takes profit after FOMC, we can't sit here and say, well, it took profit. It was up 1%. Now it's only up 20 basis points. It's because of FOMC that it's down. We can't make judgments like that if if we go bid into FOMC. So again, if we know specifically why they're selling and it is tied to FOMC, that's one thing. But if it's just a normal day where prices take profit going into close, then gotta be careful. I think today we have to be careful, which is why I think it's a bland kind of day. Let's see. Anything from our peers on TradingView ideas? Seven reasons why gold will continue to grow. I agree that gold will continue to grow. Tell me. If you want to invest in something, invest in an asset that you can touch. Okay. I'm afraid to break it to you, but Bitcoin isn't the future, he says. Whoa there, buddy. I agree with you that gold will go up. I do agree that Bitcoin is not going to be a currency, but it's definitely going to be here in the future. Absolutely. This is a real gold bull right here. He's got his usual summaries that he copy pasted back in. Uh-oh. Okay, here we go. So I agree with like most of the stuff he's saying, but correlation to inflation. Here's the big mistake people make with gold. This is the strangest thing because it's what happened was most people, what they do is they use the data. So we have gold as one of our oldest assets, right? So you can look at the price history. But what happens is they never adjust it for when we got off the gold standard. And so the way in which the chart actually works and you look at the data is that it's appreciated by thousands of percent, but that's not actually the case. That's not how it looks like. And so what they do is they average through inflationary times. And it again, it's like you can't use the average that's pulling data from before the event. And so that's actually what this is an argument that's why gold does well, is because it's good during moments of inflation. And it doesn't really, I don't know. The argument doesn't make sense when you use the data from that time. It doesn't actually make sense. And so the correlation there, again, I don't think there's correlation in that way. In gold, I think maybe the idea that people think it is causes some of it, but it's I would challenge anybody to go look at the data and see how gold moved during an inflationary time. Like if you go look at 60s, 70s, and go look and see if you'd make more money from gold or if it was a hedge or if there was a better one out there. I like gold overall, and I think gold will keep going up, but I'm not going to use like this. It's the timing, maybe I should say. Okay, we enter gold right now because of inflation, right? We all can agree that commodities are going up because of inflation, values going up because of inflation. Is it correlated though to inflation? Or are we using it to make money on it and it's going to change at some point? It will change because you know what's going to happen is we're going to take profit on it. What if we take profit on it right during the middle of inflation? Well, then all of a sudden your data is very strange. That's what happens with gold. What happens with gold is way more volatile than people think. Gold is fucking volatile. That's the reality. And if you go look, what you'll see is that a bunch of people buy gold into inflation. And you know what happens? Randomly during that inflationary period, it drops because everyone takes profit. That's the data that you do not get to see when you look at it on the average, because the average will keep going up, but you don't see the point at which the speculation in the trading is very volatile. During inflation, gold is the most volatile. When you are in inflation, do you want to be in something that's volatile or sort of stable? You want to be something that's stable, right? That's why this time everyone bought value. They bought value equities. They sold fucking bonds, which are the most consistent stable thing. And they bought equities because equities right now are less volatile than every other market. That's the truth. Equities are less volatile than the bond market right now, which is why everyone's doing it. We're going to see it again. And maybe this is an important point and not to. I do agree with the other things. I agree with everything else he had on there because I've seen this guy. It's all about, again, commodities are being bought. But the thing is here, again, is when we look at sort of what's happening, right? It's very game theoried out in the way in which we're buying and trading these things because of the ways that we understand what other people understand. But we're going to see, we are going to see that these ideas do not hold up to the actual case in the moment. Because when you look at a chart, you need to look at it through the lens of trading. If we look at this chart, I was trying to get to it. If we look at this chart through the lens of trading, right? Why did we buy down here? We bought down here because we had this idea of a double bottom and it was breaking out with the rest of the equity market. We had the idea that everything was going to be bought through. We had, again, a lot of rotations happening. The thing here, though, is that gold had come down for a year, basically. Almost a year. But do you remember what we did before that? We pushed the shit out of this thing, right? Do you guys remember about talking about inflation back in the middle of COVID in 2020 in the summer? You guys remember talking about inflation back then? The big inflationary pressure that was coming in the market? Is gold correlated to inflation if it was spiking when we were talking about recession? Not in inflation, in a deflationary way. I shouldn't say recession because yes, you'd want gold in a recession sort of idea as well. When we started talking about inflation, that's when we came down. And so this is again where when you look at a chart through the lens of trading, it's not correlated, because if it was correlated, then we could buy it on these certain events, right? And that's half the problem, is that this is what will happen is you'll have like retail traders. If you remember this when we had like the gold and silver boom, is that you'll read this, you'll Google, and they'll say that gold is correlated to inflation, but it doesn't talk about the way in which it's being traded. Everything matters about the way it's being traded, and it doesn't get traded like that. It gets traded around it, right? And so you'll have, you could say that they're linked, but the timings in which they're correlated are completely off. That's the problem. They're completely off because of the way in which you have to buy and sell things in a market. The reality is the chart looks like this. If this is inflation, right? That's inflation. Then this, how do I do it? Boom, 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 boom. That's gold. Inflation, gold. That's actually what it looks like in the data. And that's because people trade it like that. Now, you can say that this is correlated because, again, the way in which people are speculating on things. But that's exactly the problem, is because when we look at something, it's at this moment right now. So if we think that gold is correlated to inflation, we should buy gold right now, right? But the timing is not right. And so that's where you have these very strange times in which people will think we should do something because something is going to happen. Again, how many times we talk about betting on something and then it causing it to happen? This is not a situation where uh, you can somehow use that in your moment right now to be able to make something happen, right? You can't like front run these things in that same way. But this is actually what the data looks like. If you actually look at the data and you graph the data, it looks like this. Obviously, gold is way more noisy. Uh, it's very noisy through here, um, through the inflation point, and that's where all the take profit is. And then through again, sort of the point at which there's a change, there's a ton of noise, which is sort of what we saw here, which is nothing made sense in gold. This here made no sense, and that's why we were going bid through here, and then it never broke, and we were like, what the hell is going on in here? This move made a lot more sense, but it should be this. The reason why we keep talking about it, it'd be interesting, is the again the relationship with Bitcoin, and it's like people saying the same thing, that people are going to go to Bitcoin because it'll be safer than the equity market, and because it's correlated in some way. We're we're in a different market. The equity market is technically safer. Is the equity market correlated to inflation? Yeah, it is. Does it matter if gold or equities are correlated to inflation? We're we don't understand inflation when we're in it. Look at our current situation. We have to wait for someone else to fucking tell us. We don't even understand the data when it comes out. We have to all agree on it. We all have different opinions, and then something else happens. If we all have the same opinion, we change the correlation every time we make a trade. Because you know what happened this time is we all bought equities instead. We didn't all buy something else. That's the reality. And so now the correlation changed. Before, it used to be that inflation goes up, equities go down. That's why when I think New York Times released it, they did a survey or whatever, and they asked people, what do you think about, do you think inflation is going to go up or down, and like what's the effect? And everyone over like the age of 50 are the ones that say inflation is going to go up and it's bad for the market. And then it's the opposite view for those in the younger generation, right? Because maybe they never experienced inflation before, right? Is inflation bad for the market? Well, the correlation says so in the data. If inflation goes up, markets go down. So why the fuck is the market going up so much? I bet there's a correlation that says pandemics make markets go down. So why did our market go up so much? Why did Apple double in value 3 months after a pandemic? Right? And so again, these correlations are actually, they get turned on their head when you're in the moment because you're affecting You're quite literally affecting the data as you're in it, right? It's like trying to do an experiment, but you're actually affecting the experiment by actually doing it, right? These things are true, and so that's the one thing that I think is going to happen with gold is there is actually a lot of buying that's tied to this correlation idea. But are you correlated right now with inflation? It's going up with it right now, I guess. But do you know how inflation's going up? Does anyone know what that chart looks like? Anyone actually look at the chart of inflation? Doesn't look like that gold chart. I'll tell you right now. Inflation is we went from about 1% to 5%. That's a 5x. Has gold gone up 5 times? If it did, everyone would be doing it, right? And so again, the numbers are very often. That's why it's so important to realize why we're all in the equity market and we're using this very critically, and why we're using the other asset classes as our risky sort of volatile trades. Gold, when we trade it, is a swing trade, right? We're swinging it. When we trade Bitcoin, we were trying to use it as a long term, and now we understand no, that's actually now a risky sort of swing trade as well, right? Because we've taken something like the stack to flow model of Bitcoin is the same as how we consider gold. It's this idea that the supply is constrained and demand will keep going up. It'll keep causing prices to go up. Gold will always go up in price. Bitcoin will always go up in price on a technical sort of way. But it's in the moment that just because that's true in the future doesn't need to be right now, and you can actually cause major shifts with supply and demand, right? Because of other markets, just because of the flow itself. If all flows go to equity market, you don't have flow up somewhere else. So those things again are going to completely affect the reality of those, and so it turns from something that you sit in a long term. Why sit in gold making a few percent a year when you can go make 12% in the market? So that's why everyone went to passive funds, right? Now look at ETFs. Now everyone's going to ETFs because you make even more from ETFs over time. So you start to take money out. This affects all the things, which is exactly why, again, inflation this time is a completely different thing. And this is the first time anyone has ever came out and said inflation's transitory. Fucking Federal Reserve Bank telling us that it's transitory, which, I mean, at this point, it has to be. If it's not, then we have no idea what's actually happening. So if the Fed doesn't know, then we don't know. But I'm excited. Give us that appreciation. Give it to us. Decent enough. I'm trading completely flat. Trading completely flat. We are tightening, so this might be the meltdown point or the meltdown point. Neither matter. Neither matter for today until 2:30. So, but this is kind of interesting. The little tightening here. It's gonna move one way or the other. So whether we have more demand, supply, can't tell right now. It's the ratio's literally dead even. So it'll have to shift. It's pretty tight. I mean, this right here is a 1 cent spread. It's a 1 cent spread on the entire market. So that's yeah. That's quite tight. If the bid and ask are only 1 cent away on the entire market, not just like buy, yeah. It's that's a lot of nothing. Which would be great. Imagine we have perfect liquidity all the time. Not much to see on either side. Okay. All right, so we agree with this guy. On with or we agree with this guy. We looked at the correlation angle. Important to talk about. Gold's going up. Bitcoin consolidation or breakout. Doesn't look that interesting. Now up again. Bitcoin is God. Long. Trend never lies. Go up, up, up. Go down, down, down. Nice. I like that. Good job. Currencies we don't care about. All right. Stock ideas. DraftKings slowly recovering. Oof. He actually posted this before the big drop. Yikes. That sucks. Zoom stocks have done a great bullish movement. What am I looking at here? I like your trend lines. And it broke through. But this actually I don't like this one. This one is a little made up. But I agree with this idea. It did break out of its consolidation. So where's it going? Target 450, he says. I think he just chose a random spot. What is this thing? Got all of them. RSI, MACD. Okay, nothing much. Capitulation 2022. All right. What the fuck is this? See, here's the problem. Look at this guy. We get some memers. Capitulation 2022. He says, this is a quote. I might be just a simple man, but when my balls feel itchy, I know it's something coming. We're going to listen to this guy because he's itchy. I'm all for a bear market. It's coming. No question about it. Uh-oh. I love when people do this thing too, like optimism, excitement, thrill, euphoria. Bull trap, back to normal, capitulation. You got me. You figured it out what I was thinking. So he says the top is 4650. 4650. We can do that on the SPY. Let's find 46. So he says in I don't think he realized how far that is. That's 10% away. He thinks we're about to get a 10% rally, which means we should buy it right now, right? If we're going to top out at 4650, we should trade it up to there, right? That's a fucking massive rally. That's a huge rally. Don't sell now. You're going to lose all of this, right? If the market's going to go up 10% and then fall, trade it, don't short now. You're going to lose all your money. Imagine being a perma bear and you have no idea fucking which way's up, down. You're like, oh, Jesus, it's going to go up, but I'm going to sell it right now. Yeah, and then he'll buy 450s or something. Yeah. Oh, God. That's so funny, though. I also didn't realize how, I was like, 4650? You know how far that is up my trend line? That's funny. That happens though. And I think there's some people that don't there's nothing wrong with being like uh I mean, I guess there's nothing wrong with being like a short trader, like you specifically look for shorts and things like that. But if you're a short trader, you you have to be shorting when it's going down, not when it's going up. If it's still green and you're shorting, you're losing all that money for no reason. There's only I think it's because they all watch The Big Short and think that since Burry bought shorts like fucking years before that's what you're supposed to do. They forget the part where his whole life was ruined and no one wanted to stay in it. And you lost all the money during that time. If you just wait, you're a little trader. You don't have to. You, this difference right there was billions of dollars. Can't wait and can't just be randomly put into a trade whenever the thing starts. You have to start it earlier. When you have less than, if it was like even $100,000, you can do that the day it starts. Just wait. And certainly do not short into a rally that's coming. That's bad. I love those though. So funny. So funny. Oh, we saw those. So one guy thinks gold is gonna explode. One guy thinks silver is gonna go down. Distance to demand vector. Hmm. The script. This must be an average because it's not lined up. Oh, I see. They have a. Oh, that's not gonna. This chart's not helpful down here though. It's like trying to use um, trend lines, and when we look for converging levels of supply, that usually becomes an area of demand, right? When we find two converging trend lines that are supply, we talk about how price will want to go through that. I think that's what they're trying to do, but this is off. This shouldn't be pointed like this. I mean, like, yeah, it's off. That might actually be an interesting idea. I could actually do that. Might be able to just do that. The way in which I use the thing is it's lines that we're drawing. They're they're different. It depends every time, right? When we draw trend lines, they're not always the same. When we find converging supply trend lines, it's almost always an in the moment sort of thing. We're never like a month before going, oh, here's convergent supply. That's probably gonna happen. It doesn't really work like that because it doesn't. You can't set up a trade like that. But I wonder if I could make a script that would formulate the idea a little bit better. Maybe turn it into a number. What is the percent that price? Maybe I can. I've been thinking about doing something like this for a while. Maybe with that idea, so he turned it into this thing down here that gives out two values, which is supply and demand with these two. What they're using vectors, but at the point at which they're the same. I could create have it spit out a value that's the percent chance, or really the percent closeness, how close price is to two converging levels of supply, two trend lines crossing. How likely is it to go through that X point? And how close is it getting? What is the change? Maybe there's a value I can have spit out that'll be more. It could just be I don't think maybe you can do it with regression. Not sure. This gave me an idea though. Don't know why it's like this. I think he manipulated this and made it because that would not do that. But I think you could make one that would work. Interesting. Very interesting. Okay. You couldn't use that for trading is the problem. That's again the big problem with these all these different things, indicators, is that it's analysis. You look back on something. I think what people really want is something that you can use for trading. That you you're trying to make good decisions and you want to buy something, like you see something on support, but then you want something else that tells you, okay, is there something else here that is this gives me a reason why I should do it? And it's like what we talk about where we have two levels of converging supply and we say, listen, we've got two trend lines right there. That's another reason why this is bullish and people will probably buy it into that level because there's a lot of liquidity up there. So prices are going to want to converge up to that level because there's a lot of orders up there, right? And we can see that before it happens. But again, the indicators that everyone else are taking a look at that's for analysis, that would be a very sort of probability based thing if we somehow computed two trend lines crossing into a value, how close do you have one of those? So if it's this week price is approaching on a horizontal value. So on your X, you're approaching this point. Here's the probability of reaching there on your Y, right? That sort of thing. And then you would look and you'd say, okay, out of all the charts in the market, this one, these five are within a week and within 5% of those two crossing trend lines, right? Something like that would be something that people would actually be able to utilize, and it would be something that they can actually fucking trade, right? And not looking back at something that's lagged. And that's why it's so powerful to use what we use, which we're using levels in real time all the time and making decisions. That's what trading is. Trading is not using something from before and then continuing to push it along and say, well, because it happened historically, this line, we're going to continue with it. You have to always develop that and change it every moment. Every time you make a decision, that changes, right? That's the problem. But if you could have something that changes with the moment, then that would be something. And there is literally nothing other than drawing fucking trend lines. That's the problem. There's nothing else. So we, we draw some trend lines and things move. Oops, I'm just gonna do like Humana. It's like something breaks a trend line, and then there's a resistance up here. We're like, well, probably price is gonna move up to that resistance, right? And so again, there is a value there, but someone else is looking at this on an average. You know what happens on the average? The moving average is going down, and this is still maybe now just turning, right? Just turning on their thing today, and so it's like, well, now you're 2 days behind. So those things, the decision is in the past. You can't make a decision now. Yeah, maybe we'll think about that. Like here, right? You have two converging. I don't know how you would put that into a script actually. Where I'll think about it. Where is okay, travel turned enough. All right, folks. You know what time it is. This is it's just a little too much. It's too much. It's just too much action right now. I can't handle it. So what I'm gonna do is I'm gonna wait until 2 o'clock to take a look at what the Fed have to say, and then listen to Powell at 2:30, and then we're gonna come back and either see everything look the exact same or we're in all-time highs making money. So I will see you guys then. Again, just be prepared for, this chart is going to look a lot different at 2:30. It's going to be spiking around when Powell says stuff. That's normal. That's normal. Remember, that's not weird. Don't make any rash decisions off of what you see any from these candles. That doesn't that's not the way to do it, right? If there's a decision needing to be made, it should be from your daily chart because something actually changed. Something technically changed. It broke a level. It's not good. Something like that, right? Not from one of those intraday candles. So keep that in mind. Otherwise, guys, enjoy your lunch. I will see you guys this afternoon. We'll get after it. So see you.